Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. We want to let you know that this weekend you're going to see the first ever Best Mutual Funds 2016 awards from IBD. And what we've done is we've gone through all the different mutual funds out there in all the different categories and looked for the top performers over the last 10 years. So be sure to check that out, and we'll have a link to it from our site at investors.com/investingshow.
Now, on today's show, we are going to talk about looking for the Rolls-Royce of stocks. And how do we do that? Well, they have 4 key traits that you want to look for. But first, let's take a look at the market. Well, the market continues to march higher. The big news this week came from Fed Chief Janet Yellen, who announced a lower number of rate hikes than anticipated. There's 2 instead of the projected 4. And oil continued to rally, and the market like that as well.
Yes, indeed. And the NASDAQ and the S&P both closed higher for the 5th straight week. But the NASDAQ does have 5 distribution days, and those are down days on volume, and they point to some level of institutional selling.
Now, these have been mostly mild in nature with no huge spikes in downside selling. But we still have a mostly defensive market, don't we, Matt? With beaten down names and what we call junk off the bottom job leading the rally, along with heavily sold blue chip stocks. And stocks making new highs in IBD include a long list of utility names.
That's right, and that's different from what you would prefer to see in that list. And if you look at some of the market's big names like Alphabet and Facebook, the chart action is nice and tight with support at the 10-week line as they form bases, but they both have lousy accumulation distribution ratings. As of Friday, Facebook had E, which is the worst possible, and Alphabet had a D-. And that means that there's been more selling than buying in those stocks over the last 13 weeks. So you want to see that get to hopefully a C or better by any breakout.
So Fortune Brands has been moving higher, but on unconvincing volume. And it has kind of melted higher, but the volume is certainly not convincing. As Matt said, we've seen lower volume on several stocks. Now, another one that's moving higher, kind of melting up on low volume, is McDonald's.
And Priceline is another example of a low volume breakout. And if you scroll through the IBD 50 this weekend, you'll see that there are many stocks, for example, Edwards Lifesciences, that broke out but are still floating in a buy zone, unable, at least so far, to gain a lot of traction. And that just shows hesitation among fund managers.
Now, overall, it remains a somewhat tricky market, so the best thing that investors can do is demand huge volume on a breakout. Now, those stocks that have moved higher on big volume have tended to hold on to their gains
That's right.
better than the ones that have gone up on low volume. Now, you have to have some patience. We will have some big names reporting again in April.
And even next week, we have some interesting reports from Nike, Five Below, and also KB Homes. Those home builder stocks, as we talked about last week, have been rebounding, so it'll be interesting to see how KB reports. So today we want to talk about the traits of a true market leader and distinguish between the best-known companies and the best-performing stocks. And to do that, we're going to take a look at 4 key traits that you want to look for.
Now, we've talked about looking for the Rolls-Royce of stocks, and by using these 4 traits, you can narrow down the choices to the cream of the crop. Now, the first one is the relative strength number. This compares a stock's price over the last 12 months to all the other stocks in our database, and it gives it a number from 1 to 99, with 99 being the best. Now, the relative strength line compares the stock's price performance to that of the S&P. And we're looking for stocks that are vastly outperforming the indexes. So look for that RS line to be hitting new highs.
Now, Ken Shreve did an Investors Corner article on this topic, and he compared Qualcomm and Broadcom, which was formerly known as Avago before they merged. Qualcomm, which is a chip designer, was a huge winner, as we all remember, in the 90s as cell phones really took off. But today, it's lagging, and it's been on a downward slope since July 2014, and its relative strength line reflects that. Now, Avago has been showing more market leadership and recently broke out of a double bottom.
Now, leaders should also have outstanding earnings and sales growth and are taking market shares from the competition. These are typically newer companies, although older large cap names can sometimes fit the bill as they successfully adapt to fast changing industry conditions.
So sticking with this comparison of Qualcomm and Broadcom, you can see how Broadcom's numbers are much better in recent quarters. And as you know, the best stocks may not be the best known or have the largest market cap, but they do tend to have the fastest earnings growth.
Now, another bit of information that top stocks have in common is the strength of the industry group and the sector. You want to look for top leaders in top groups. So how do you find those? Well, we have an industry group rankings every day in the paper under What's the Market Trends section.
And the best stocks also tend to have rising fund ownership over the last few quarters. And you can track that in all of the 4 traits that we're talking about in MarketSmith in a lot of detail. And also you can find it in Stock Checkup on investors.com. In the supply and demand area of Checkup, you can see how Broadcom has had 6 straight quarters of rising ownership, including a big jump recently, which was mostly due to that recent merger. Qualcomm, on the other hand, has 0 quarters of rising ownership, and the number of funds fell 3% last quarter.
And to find the leaders in the group, go to Stock Checkup, which is found in investors.com. Now, the top 5 stocks are ranked based on their overall composite rating. You can see by looking at the list that Broadcom is number 6. There are other names in Stock Checkup that are maybe perhaps even better. We have Infi, we have MaxLinear, NVIDIA, Silicon Motion, and some of them have better composite ratings.
Right, so as you're researching stocks, you can start by looking at these 4 key traits and use Checkup to help you filter through stock ideas to go from good to better to best.
I wanted to thank you for everyone that has sent us in comments this week. I've tried to answer as many as I could. And if you have further comments, you can reach us. Send your comments into investors.com/investingshow.
And while you're there, also check out, as we mentioned earlier, the Best Mutual Funds 2016 awards and the full report on all the different really top performing funds that are out there.
Okay, see you next week, everybody.